Listen, all you New Yorkers. Excuse me, taxi. Okay, man, we're looking around.
This is the 77 WABC minicast.
Welcome back, everybody. Hour 3. We're going to do some stock market work in just a second. By the way, you can live stream us over the internet. You want to hear us all across the country, around the globe, throughout the solar system, and the Milky Way. And the Milky Way. Let's not forget that. And we're going to go with 3 people. Special Steve Forbes is sticking around to help us out, chairman and editor-in-chief of Forbes Media, and his book, Inflation, What It Is, Why It's Bad, and How to Fix It. We got Jim Lacamp, Morgan Stanley Executive Director and Senior Portfolio Management Director, and Pete Najarian, co-founder of Market Rebellion and Option Monster. Gentlemen, welcome back. Great week for stocks. Everything was up. Dow 1,400, NASDAQ 1024, S&P 500. I want to ask Pete Najarian. We saw the low in stocks 2 Mondays ago. How about that?
Yeah.
I think it was 2 Mondays ago. The next day was the 1100. This past week, hopes for a peace deal and a ceasefire. What do you think? What does your option story tell you?
Yeah, well, it tells me that there's still a lot of bullishness out there to back up what you were just saying, Larry. And as a matter of fact, all you've got to do is take a look at how quickly we've watched the price of oil drop back down. It's still well above where it started, a couple of weeks ago when it was trading, call it 67, and now it's back down towards 95 after that big spike up, and I'm talking about WTI. Mm-hmm. The volatility has come out of the market to a great extent because we'd gotten up and over that 30 level. We were at 31.50 for the highs for the VIX. It now is trading closer to 19, which is getting a little bit closer to normal. We also have earnings season coming in front of us, and I think that's a big deal because when you look at the financials and how well they have been performing for quarter after quarter after quarter, and I expect it again, I have high expectations like many do, because we've got Monday kicking off with Goldman Sachs, and then, of course, Tuesday it starts to get a lot more active with Bank of America, JP Morgan, Wells Fargo, and I think those numbers will be pretty strong. So the combination of that, and then if you go even a little bit more on the tech side of things, AI, the AI infrastructure names are absolutely on fire. And I don't think everybody's fully paying attention to that, but they should be, because whether it's Marvell or Nibius or Intel or you take your pick, they are absolutely ripping to the upside, and year-to-date numbers are outrageous. So I think there is a bullishness that has now been able to been reached because of the fact that what's going on and how quickly crude has pulled back, but it's not going to. It will take a while to get all the way back, I think, because of the damage to refineries and so forth, and a lot of other issues that they're going to have to be dealing with. But certainly is a breath of fresh air from what we've seen this past week.
It's interesting. So West Texas dropped $14 down to 95. 91, call it 96. So we want to see it back around 60. A question, before I go to Steve Forbes on this, but question to Jim Lacamp, who still lives in Texas, if I'm not mistaken, which is,
I still do.
Which is it's somewhere near the oil patch. I don't know, someplace.
About 3 hours.
Wherever your headquarters are.
About 3 hours.
I'm completely lost until Landman comes back on. I completely lost my bearings, but I'll take your word for it, Lacamp. Suppose the Iranians keep being very difficult and keep holding back the Strait of Hormuz. Let's suppose West Texas keeps it around $95 a barrel. Okay, and by the way, Brent is running about the same. Suppose you at those levels, which we've had before. We've had many years with those levels, and the stock market still did well. In other words, do I need to get back to $60 a barrel, or if I'm at $95 a barrel, can profits and the economy and the stock market continue to do well?
I think you can do okay at 95. That's the upper bound of where I would say you can do okay. When you adjust it for inflation, yeah, it's certainly been a lot higher than where it is now, but when it was there, it was disruptive. And more problematic is with the Straits, we've got all these supply chain in the oil industry disruption with refineries, et cetera, and the crack spreads are very high. Another 3 weeks of this and we would have problems. But there's reports out right now that the U.S. is there in the Strait now, and there are more ships coming across. And if that's the case, I think we're going to be okay. In terms of the market, I think the market can handle it. I agree with what Pete said, mostly. And the internet AI infrastructure construct is still very, very strong. I like the groups that he mentioned, and I would throw in the memory stocks, man. Those all rocked this week. And it just shows that there is still a bullishness. I would call it a fragile bullishness. I was talking with Steve off air. It's kind of like a rodeo bull. It can be kind of hard to stay on, and it's kind of a broken down rodeo bull a little bit, but it's still a rodeo bull. So we're still in there, but valuations are high, and the news flow is still very, very suspect in terms of what's going to come next. So I think we're still in a fragile bull market, and I think longer term investors are going to be okay. But in the short and let's not forget, in midterm election years, that time frame in the summerish time frame between March and October is usually pretty rocky anyway. But long term, I think we're okay.
So, Steve Forbes, the president said today that there are reports that Iran is operating as a toll booth in the Strait of Hormuz and is blocking ships. And the president said, we won't let that happen. We are not going to let that happen. Now, what that means is optimally Iran will pull back, but if they don't pull back, we're going to go back into combat. How do you read that?
Well, I think the key thing is, as you mentioned earlier in the show, Iran thinks they've won this war, not on the battlefield, obviously, but politically. That everyone seems to, they think everyone's upset about the war. They think the administration is spooked by the midterm elections and higher gasoline prices, and that they just stick it out. They're going to get at the bargaining table what they had lost militarily and actually win a big victory in the sense they took all this punishment from the U.S. and the Israelis, and they survived. So I think disabusing on that, I wish he'd call back Vice President Vance and tell him to take Sunday off and make very clear that we're going to close the Strait of Hormuz because of this tolling and start building those pipelines, as we chatted about earlier, and we're going to resume hostilities. And the hostilities are going to, remember, the Israelis still have 10 days of targets that they can hit. We have targets that we can still hit. And if the Iranians know they're not going to win politically, that the president's going to see this thing through, regardless of short-term problems, I think that's going to profoundly change the psychology.
Well, I think, one thing Robert O'Brien mentioned, very important point, is the Lebanese situation. Hezbollah is still fighting. They have a lot of underground tunnels that run through Lebanon. And Iran is saying they won't play ball unless Israel pulls out and stops attacking Lebanon. But that's nonsense. That's BS. First of all, Israel and Lebanon were not part of the ceasefire discussions. But second of all, who do you think is financing it? Iran. I mean, that's an issue.
And that gets to something very important. The Iranians think, they think this is still in some sense in spirit the Biden administration, where you can keep putting terms on the table and say, to create the right atmosphere for negotiations, you got to have the Israelis pull back from Lebanon. And so it's an old tactic of theirs, keep putting stuff that they keep demanding to keep the negotiations going, even though they're going nowhere. And so we should just say, Lebanon's separate. The Israelis are going to do what they have to do. Sorry, guys, that's not going to be discussed.
Yeah, absolutely. Do we need any lower interest rates, Pete Najarian, to sustain the market?
I don't know that we need that to be lower. I think everybody's anticipation was that we were getting closer to that. But obviously, when you start looking at some of the numbers that we are all seeing right now, whether it's the CPI numbers and so forth. I think people are sort of backpedaling a little bit off of that. I do think that the markets can survive and do very well without that, but that would be something that we've all been looking forward to that, waiting and waiting and waiting, and there just hasn't been an aggressive move for that, and I don't know what it looks like for the rest of the year. I know what everybody says, and everybody loves to give you this whole line, Larry, where they say, well, we're expecting 2 cuts this year or whatever they might say. How can they expect that without having the data in front of them? I've always been baffled by this whole thing, that they can actually go out there and say that. So if we're really going off of what the numbers really are, I think it's gonna play out on its own. But I don't know how they possibly can say that it's going to do this without having the actual numbers in front of them.
To Pete's point, the Fed funds futures are all over the place. A week or so ago, they were saying no cut until December of next year. Yeah. Now they're saying September of next year. But the reality is we don't know until we see what crude does, and then we see what this agreement ends up being. And if crude falls $20 from here, they're going to start moving that back closer.
Yep.
Mm-hmm. But at the moment, I would just say, you looked at the CPI numbers. The bulk of it was energy. Almost all of it was energy. Mm-hmm. But having said that, there's no reason why the Fed has to lower rates and push more money into the economy right now. Let it go. Just let it go. Mm-hmm. Don't do anything. Just stand pat. You had pretty good jobs numbers, right? And profits numbers, as Pete said, are very good. I don't see, let the Fed not do anything for a while.
Consumer spending was still good. Durable goods were good. We had a number of good reports out.
Yeah, business CapEx was very strong. Let's wait for the Kevin Warsh hearing. By the way, Kevin Warsh, now his banking hearing has been postponed because he didn't get his paperwork in. At least that's what I was reading. I don't understand that. I mean, I have to talk. I have not spoken to him in a while. How can he not get his paperwork in? I mean, let's move this ball down. I got big enough troubles with Jay Powell, who wants to be chairman for life, and he got his right. We're right. The left is fighting the forever war, and the chairman for life now. That's a new one. But I don't want him to be chairman for life. I want Kevin Warsh to get in, but he hadn't gotten his paperwork in. So that doesn't help, Steve. We have to find out. We have to get to the bottom of this paperwork business.
Yeah, that may just. I take all these reports now with a big grain of salt. He's been through this process before, so it isn't as if he's a novice about what you have to go through. And he probably has 99% of it prepared already from what he's done in the past. So I don't know what the backstory is on that, but I don't take it seriously. And I love John Carney, our friend's suggestion. Trump should just pardon Powell, get this thing out of the way, right, and move forward. Because even though people say we may not need to reduce interest rates, the short rates are too high. So it shouldn't be seen as a stimulus to the economy. It should be the price of short-term money should be lower than long-term money. And the gap between the T-bill and the 10-year is way low historic standards. And they also should reduce the rate that they're now paying on bank reserves. So if the bank wants to lend, it can lend and doesn't have to worry about losing all those juicy interest rates at the Federal Reserve.
And there's going to be problems in commercial real estate unless rates do start coming down. The CMBS market is a little shaky here. It's been counting on lower rates. Now they're hearing the rates aren't going to come down as fast, and there could be problems there. They need to lower those rates.
By the way, the president said, I think yesterday, that he will pardon anybody within 200 feet of the Oval Office who work for him. Now, I don't think that's going to include Jay Powell. I think that rules Powell out because it's several blocks away.
What about Larry Kudlow?
But he didn't have,
Larry.
I didn't need a pardon in the first term, and my pardon was with Fox Media. Anyway, let me not go there. But so, Steve, you want to say? I'm surprised with gold is up as high as it is. You want the Fed to lower rates? The Fed funds rate?
The corollary, and David Malpass and others make the point, the corollary has to be we want a stable dollar.
Yes.
We don't want, we're not going to be in the business, and I hope Kevin Walsh makes this point, of the business of manipulating economic activity. We want a stable measure of value, which is a stable dollar, and we don't want the Fed doing the form of rent control and trying to manipulate the rent for money. That's what they call interest rates. And so lower the short rates, but make clear it's not to stimulate the economy, it's to get right pricing in the markets and let the markets determine who gets the money and who's not. And in terms of liquidity, that is going to be a very commercial real estate. A lot of it is sadly in trouble. Jim Lacamp is right on that.
And we're talking stocks with Steve Forbes, Chairman and Editor-in-Chief of Forbes Media, and Jim Lacamp, Morgan Stanley, Senior Portfolio Management Director, and Pete Najarian, co-founder of Market Rebellion and Option Monster. Jim Lacamp, what are you buying down there? You sort of signed on to Pete, but I wondered if you had anything else to report.
I do. I think the metals have another rally in them here. They're fighting wars over this stuff, and the demand, especially for industrial metals, silver and copper, is extraordinarily high. If you can't like AI infrastructure and not recognize that these areas are in very high demand. They were used for liquidity at the beginning of the war. Turkey sold off a lot of their precious metals, but I like the precious metals, but I like the industrial metals better. And the memory stocks, as I mentioned, and the optical stocks, and then some of the members of that group include Lumentum and Fabrinet and Corning, and that group has been very strong as well.
Steve Forbes, what are you thinking?
Right now, I'm thinking don't blow it with Iran, and I think that's ultimately where we're going to be headed. In the meantime, I like your advice, Larry, for us oldie goldies. Stick with the index stocks, have a gold reserve, have a cash reserve, and we'll take advice from guys like Jim and Pete and ride the bull. And hopefully this bull doesn't become hamburger anytime soon.
I like it. Buy the index. I'm still in the sell oil, buy the index mode. I don't know. Perhaps I'll be wrong.
The Larry Kudlow Show on the Red Apple Podcast Network.